All right, cool. We are live here on the Independent Investor Channel. My name is Ryan. Happy Friday to everyone who's taken the time to make their way in here. If you guys could give me kind of a sound check, thumbs up, whatever it is that you do in the social media community, let me know that this is coming through. If there are any problems, let me know and we can adjust accordingly. There is a core group of channel creators and loyal subscribers, not only to me, but to the community in here. So I want to personally thank, on behalf of the channel, everybody who's made their way in here. I've got passive income investing that's waiting in the wings. Passive investing income will kick on here. Kyle will come on in about 10 or so minutes after I take care of some housekeeping on the channel. Kind of a lot happened this week, really a ton, to be honest with you. First and foremost, I want to give a shout out real quick to JMac Investing for turning me on. You guys, if you're channel creators, you need to make sure that you're linking the equipment that you use through the channel. You got to make sure and link that in the description, because there's going to be channel creators that may not even watch your content, but they enjoy the quality of your lighting, your sound, or your in this case the webcam. And I'm super stoked. So I got to thank Jason for that. I used his affiliate link, so hopefully he made a few bucks off of that. I do want to stay along this stream for JMac Investing as well, because he kind of hit a milestone this week with the monetization coming to some realization there. So congratulations to Jason, starting to realize some real money coming in. That really legitimizes all the effort that you put in. We talk to a lot of different spectrum of people across the board, beginning investors, people who have never invested before at all. And then we've got some channel creators who have kind of taken that next level step in the process. And I just think it's wonderful. We call it in the military cross training, quite frankly, because if you're going to try to do this gig on your own, I really think you're missing out from a lot of different perspectives that are offered through this community. Okay, you're not going to tune into a 2-hour live stream on the Independent Investor Channel, nor are you going to tune into a 5 or 10 minute viral video and come out the other side an expert in investing. It does not work that way. Okay, so the folks that are in here is a very, very good example, a sample of folks who are really taking a concerted effort to improve their own personal investment profile. I think that's super, super important. I think most of the folks get it in the investing community, and a lot of the loyal subscribers that tune into a lot of these channel creators also get it. But we have to make sure that we're being fair to the new investor that come in and really understand that they're not going to tune into a channel like myself or Kyle, who's about to pop on here, or a JMac Investing or a Gen X dividend investor. They're not just going to wake up the next morning and have a portfolio that size. It just doesn't work that way. Me personally, I didn't just wake up overnight and have this level of net worth put away. It took a lot of $100 profit here, a lot of $100 profit there, some losses as well, learning, getting past barriers and road bumps along the way, man. It happens. But for those that really stay true and they persevere in trying to make themselves a better investor, and that is the key to understand. You're just not going to get it in one offering. It really has to be one of those things that you devote to. And when you look at it in that context or through that perspective or lens, it really does come a lot more justifiable to actually commit some of your time to the live stream. Okay, now it doesn't mean that you have to hang out with me for 2 hours on a Friday. Some absolutely will, and we welcome that. But that's absolutely not necessary in coming on for a few minutes every week and providing yourself that little bit of insight, that little bit of break away from your normal life, and giving yourself that opportunity to just be a better you, quite frankly. investing in and of itself, I contend, is fairly straightforward. It's straightforward for me. I have to digress a lot and really understand that there are folks out there who have never invested one day in their life. On the flip side of it, I've invested for most days of my life. So it's hard to imagine, my life without the investing opportunity and what it's meant for me. But the real takeaway is to understand how passionate I am and a lot of these other channel creators here and subscribers to the message who are empowering their own personal perspectives and their own personal wealth building programs, man. It's not going to resonate as much if you try to do it on your own. And that's why I say all the time, I really would put this group up against anybody. I really would, because I think this group really gets it. And the cross training that I talk about is the real takeaway. Okay, let me break something to you. The investing landscape, or the investing game in and of itself, has changed. It's changed radically with the emergence of YouTube not being but 10 years old. The opportunity to come online and socialize with people from all over the world. I'm about to kick on a perspective from our brothers and sisters up north in Canada, and we have a lot of subscribers to the message from Canada as well as a lot of representatives from around the world who also may not have certain opportunities. That's a real takeaway. But I think the important thing is to look to swap dialogue with some folks who really take this seriously. They take the topic seriously, but furthermore, they take it seriously for themselves. Okay. And that's the real takeaway. I know we hit a little bit of a nosedive, but I want to finish out with the channel creators shout outs. I know a lot of you guys are stoked that you got wrenches. You've all been promoted. So I'll be sending the salary checks out starting next week. So you'll enjoy that with your wrench. Okay. But some channel creators in the group here want to make sure and call out as well. Quest to Fire first right here on the list, turning out some killer content. I really hope you can make it on the channel one of these Fridays. It's a lot of fun, and I think you'll be really satisfied with coming on and just taking a little bit of a different angle to this channel. Who knows, maybe tonight's your night. You're absolutely welcome to kick on, but Quest to Fire, certainly for the folks that are making their way onto the live stream after. My only ask of my subscriber base, as well as the supporters of any of these other channel creators who take that extra time to come on here and really support the message from a core perspective. This is the core group in this. You want to kick over and help these channel creators that are cutting teeth and trying to get up to where Jason is. And it really didn't take Jason that long, in the grand scheme of things. I don't know if he would agree with me, but I don't know, man. From a personal perspective, I was just stoked as hell to see that. I really was. And I think he would agree. I don't know if he's done the math. Me and Kyle were talking before we went live about the size of the stock you would have to own to render the dividend to make that type of monthly income. But in all seriousness, making that side hustle income, or whatever the heck you want to call it, you're wealth building. That's what you're doing. And it gives you a little bit of validation as to all the hard work and investment that you put into the channel. So again, congratulations to J Mac Investing for sure. Well deserved. Dave with Hidden Freedom Investing, I've been catching some of his content, as well as Jamie as well with his new icon. It's pretty awesome. But Hidden Freedom Investing, I watched his portfolio review. It really struck me. It was very, very good content. Dave's just a great guy. And I think there's a lot of different takeaways. I don't know if Dave has been building a portfolio for years and years and years. I don't know. I think my portfolio has evolved. It does not have the same personality this year that it did 5 years ago. That's for sure. And I think that's kind of what you need to prepare for, is when you strap on this and you get on this roller coaster of investing, you really have to prepare for all outcomes. But that was a real enjoyable offering from Dave with Hidden Freedom Investing, who's taken the time to pop in here as well. Let me scroll up here. I want to make sure Mr. Finance Guru's in the group. So very cool. Mr. Finance Guru is a staunch supporter of the Independent Investor Channel, as well as the rest of these folks. Right above there is Matt Money as well, a good friend of mine as well, and a good friend of Kyle's as well. Those two seemingly are all over YouTube now. It's kind of cool. I get my pick of whatever videos they're releasing from day to day. I think they're almost on a daily upload schedule, it seems like, which is awesome, man. It's stoking the fire. And quite frankly, from my perspective, that just shows me that these cats are hungry. That's all. So if there was a takeaway from that, does it mean that you have to come on and provide content to an audience? No, it doesn't. It just kind of proves the level of devotion that these guys have got to continue aggressively on a wealth building strategy for themselves. Pretty legit. That's at least my takeaway from it. So I've got most of the channel creators called out as well. I'm trying to get Jamie with his wrench that I demoted from him. But listen, in all sincerity, I really want to thank anybody who makes their way to the Independent Investor live stream. I really want you to take this YouTube opportunity that we put out there on the airwaves a little bit of a step further, okay? If you want entertainment out of this gig, no problem. You can probably glean a little bit of entertainment from this, but I really want you to understand that there's a whole different perspective. I got a little bit of heat this week for a long-winded video that I put out, and I sat back for a second and I kind of thought, that's really interesting. In a 35 minutes that was free content that was put out there, you can skip over the ads. What did this consumer expect? And I think certainly constructive criticism to say, hey, look, the dialogue is a little bit long-winded. That's fine. But I think it speaks to a larger perspective. Honestly, I don't watch YouTube content and expect my life to change on a dime. No way. And I would just ask that if anybody is looking to pursue this self-directed investing course for themselves, give it a chance. And please understand that it is like climbing a mountain, okay? It really is. And you'll be climbing that mountain the rest of your life. You really will. You'll get better. You really will. You got to give yourself a chance, all right? And in one word, you really have to believe. You have to believe that there's an opportunity there to make yourself that much better, okay? And it doesn't just relate to investing, okay? I've said many times on the channel, investing is kind of a shallow topic in and of itself. But if we can take it one step further and we can invest in the correct manner to where we've prepared ourselves to enter into investing, full well knowing that we're going to evolve aggressively over time, now you're getting it. Now, the next step in that is you start to ask yourself, how can I make myself a better person? How can I do other things that are going to indirectly contribute to my investing career and my wealth building? I only offer that because it's the truth. It really is. I offered a video this week on credit card stewardship, and it was amazing. It didn't do very well, but that's just one small page out of my playbook. Those little $400 or $500 cash injections, just because I earn points on things that I would just as regularly buy, those little injections help when you're wealth building, right? And it's just amazing to me how the majority of people will not come on and look to consume a piece of content for 2 hours because they think it's a waste of time. And so we always want to strive for that perspective and always try to take and glean away what we can take and deploy in our own personal lives. But with that, guys, I've got Kyle here that's waiting to jump onto the stream. I thank you for that opportunity, Kyle. I know you've been waiting, but I absolutely want to make sure. And if there's more channel creators that pop in here, and honestly, guys, this is open forum. I can run this for 2 hours, or I can have some folks come on, say hi to the group for 5 minutes. Remember how I talked about that hunger? If I had this dangled in front of me, you betcha I would have been right there taking advantage of the opportunity. So with that, guys, I'm going to bring Kyle on to say hi, address the group on this Friday evening, almost through January. It's been an interesting year already. And we'll talk a little bit more about the stock market when I bring Kyle on here. And He can kind of help me from a dual perspective.
Happy Friday, passive income investors. It's good to see you there. I've got you on two screens, so that way I can read the comments, look up stocks, and then I got my phone doing the stream. But I'm glad to be on, and thanks so much for having me.
Mute your other browser, Kyle.
Oh, sorry. Is it giving me
you
some?
You can keep it open. Just right-click it and mute it. You're good.
Yeah, okay. Let me get rid of that altogether. There, that'll be a little bit easier for you. Yeah, what's going on? Thanks so much for popping back on. It was fun chatting to you a little bit behind the stream as well. And I want to do a big shout out to some of the investors here. But I saw a comment. I want to see Quest for to Fire get on here. She keeps commenting around. It'd be nice to get a female perspective on investing because it seems to be a rarity. But I'm seeing them pop up more and more often recently.
It is a rarity, and the female investors that I know, they're doing the same thing that we're doing, building wealth individually and independently. Every portfolio is different, but I don't know. Everybody has their skills that they deploy to give them that little bit of edge. Not everybody's a perfect investor, but I just think it's cool to see all the different tools and that cross training, man. That's for real. That's going on. Like I learned from you just as easy, Kyle.
Yeah, well, I appreciate it. And I figured I'd start asking off some stock questions here because the markets have been very wonky. Today, we finally saw our first real red day in what seems like forever. But the real comment I have about all of this is, considering I'm mostly a passive income investor at this point and I'm mainly focused on dividends, I think it's interesting to watch people that are long-term investors but starting to sell out of their positions because of these rallies, especially considering a lot of people were buying Tesla, caught the rally and sold out. But I want to know what your perspective on is, or the perspective of when you should sell a stock, because it's something I think most investors have problems with, especially maybe looking at their Apple stock sitting up 80% in the last year, right? Now, do you sell any of your positions out, or are you still just concrete, just focusing on the dividends?
Sure.
You sold some Apple?
Yeah, just on valuation. That was a simple call for me. It made sense for me. I could be wrong. I did keep a core position of 11 shares, but they had run up so nicely. And, just with the same deliberation, I looked at Intel right today, own a pretty good position in Intel and didn't sell based on valuation. Now, as far as the passive investors that are selling after one day, I bought 100 shares of ETF today. So,
oh, wow.
See, my strategic goal was to move a little bit more passive, and I can make those scale buys whenever I want. A day like today was a good day. Started off a little bit edgy in the morning. I knew it had some potential today to get dicey with the bat cat flu, but yeah, and I saw it, and so I decided to go ahead and move a little bit in. So my ETF positions that I have, I bought some VYM today, and I did actually take a little bit more of a position in Vanguard in the S&P. So for my spouse, not me. But just ironic.
Getting some index.
Oh, well, it's my goal of moving. So my portfolio, I'm trying to do 25% passive investing and the remaining 75% to dividend growth strategy, which seems to be kind of where I want to be,
Yeah. So I've been 100% on the passive end and just collecting the dividends, but I sit here facing the same dilemma when I'm looking at my Apple stock. Now, the reason I haven't been selling it is because I've scaled down on it once already when I had it really overvalued back, maybe a year ago. But now looking at it, it might have been a bad decision. But I mean, trading at a multiple of 25, considering if you compare it to its peers, something like Microsoft, I mean, Microsoft has been sitting up in the 25-30 range for a long time. So I've always been sitting on the edge of, do I want to give up my great yield on cost, considering I'm sitting at about a 1.9% with Apple right now. Yeah. And I'm pretty happy with where the position sits. But I find these times to be really interesting, talking to friends and watching people on YouTube, because people start doing things they never said they would do. And then you also have people like I've been talking to, trying to get them into investing, and they finally started building up money. But the first place their mind wants to go is to Tesla or to anything else that's just been on fire lately. And it just bothers me to the core. And I'm like, why aren't you focusing on the value stocks, the generational stocks? And I'm trying to get them pushed into it. But I feel like everyone's kind of going against logic right now. And it's hard in my perspective, with the positions I'm sitting on, whether I should be leveraging them down and even just sitting on cash. But I don't know. I'm still collecting decent dividends, and I'm thinking at my age, even if the markets recorrect by 20 or 30%, or Apple drops that much, is it really going to be worth me selling out of my position now? Because I watched it happen once when, you know, Apple went way up. I sold and it dipped. Maybe I helped buy my mom some more when it dipped, but people thought it was nuts because Apple was trading at 220, and they're like, "Why would you be buying up here?" And then, you know, it dipped, and sure enough, boom, we saw the explosion, right? But I don't know if I want to get caught up in those trends because I'm really happy with my entire investment strategy as it's playing out right now.
Yeah.
And I always kind of remind myself, look, like if I'm getting a 20 or 30% return a year consistently, why would I ever try and do anything else? Because I mean, swing trading is starting to feel very attractive on certain stocks. So I mean, I'm sitting here with those angels and devils on my shoulder saying, you know, follow your core values that have worked instead of going down the route of, you know, like everyone gets into margin these days. And now that things are so high flying, it's easy for people to get caught up in it and not remember, you know, how fast things can turn the other way.
It's just a rule of thumb that I abide by. It might be easy to get tempted by the allure of. I do run a margin account in the first trade, but I don't use the margin. I've mentioned this before on the channel. I only do that to eliminate the opportunity for free riding restriction. That's all. But I invest with money I have. It's just a rule of thumb. I know some people may look at that and they say, well, you know, maybe you could be a little bit more aggressive. And quite frankly, with the money that I do have, I probably could. But why would we be justifying that type of activity now with the
Yeah.
market where it is? Get it down 20 or 30 or maybe even 40%, you know, and then start to look to redeploy new dry powder that's on the side. But justifying margin is something that I've never done. I mean, if you go back to the early days of the financial education, the one kudo that I really give to Jeremy is that he walks through for new investors the big mistake that he made, and he was in Hawk $187,000. Now that's a big roadblock, and I do tip my hat to the guy because he came back. You know,
I was there for were you there for the Go Broke days?
yeah,
GoPro,
absolutely.
man, that was fat. I actually traded GoPro back then when I was more into trading, and I was lucky to make like I think I made $500 or $600 on it, and I just got in and out real quick playing the trends. But
Yeah,
I try and avoid I try and avoid looking at stocks like they're stocks. I always try and keep imagining the business aspect of it
that's
because
so
that's what's happening right now. Is people are getting caught up in the numbers and they're not getting caught up in the actual business that people are showing up to work for every bloody day. And I constantly got to remind myself that, especially at these times, like, do I really want to get into trading or swing trading these technicals? Sure. I mean, there's good potential. I've had a lot of luck with it in the past, but I'm really enjoying just, you know, let's wait, let's collect the dividends. And when something comes up,
I
maybe
would
start, you know,
I would say
gunpowdering it up.
for somebody with as much tolerance to the market as you have and as much as you pay attention to, I would give you this advice. And again, you know, take it or leave it. Um, I, always trust your style. What I said at the top of the stream, I mean, you know, my style is not going to be the same as yours or anybody else in this community. What I mean by that is you may find that you're really successful at that. Now, if you're swing trading and you're finding that it's really not your thing, or you're looking at the chart and seemingly you're not seeing what it is you need to see, but I gave my winning percentage for last year 86%. Okay. So for me to just
Oh,
say,
wow.
I'm not going to do that because it's fundamentally something that is faux pas, I just disagree. Again, what's this game about? It's about money. So if you have the ability to render some profits, now for Apple example, I didn't swing trade that per se because I still have a base position. I just trimmed some
Yeah.
profit. And, you know, nailing down when the exact time to do that, I just don't speak in definitives that way. It's a great question. It's a core question. It's the question everybody has. Like, what's the right answer, Ryan? Everybody wants to come onto YouTube, right, and get that right answer and leave. Unfortunately, when you tune a live stream off like this, you got to go on with your regular lives, and you're on your own, and you're making those decisions based on the support that you've got, maybe you know, pushing some of those options out there. I'm pretty open with some of the swing trading that I do. And to justify that, I keep core positions in the portfolio because I'm not working with $1 million portfolio, you know.
Yeah.
I think an investor like a Gen X dividend investor, does it make sense for that portfolio to be swing trade? Absolutely not. What makes sense for that portfolio is to make solid dividend income with the most solid companies that are out there. That makes sense. I just think a lot of newer investors with 500 to start maybe need to look at the passive option as opposed to trying to pick that 2 or 3 stocks that they're picking up a $1.75 dividend to start. So there is some middle ground there to be had. I just think there's an extreme on either end as well.
That leads me to another question that I want to ask you too, because starting out is a whole nother ball game. And when I started out, I was a whole nother investor compared to what I'm dealing with today in comparison. Because back then I literally started with 500, $1,000, but I never would have spent my time looking at companies like Apple or Microsoft. When I first got into investing, I just looked around and said, what can I find out in the world that I understand? And then find the company that has the most potential and the most like underrated price. And to me, that was Canopy Growth Corp and Northland Power. I still hold Northland Power to today, and the return it's been giving me is absurd, but not as absurd as Canopy. I mean, I took a huge win on that one, but that's the problem in the beginning days of investing, I think, is trying to get somebody. It comes back to your income too, I think, because like in Matt's position, Matt's working a very high income job. So I don't think he needs to be as reliant on taking on as much risk as say I do. But because my income isn't in a range where my income could be considered the high risk part of my portfolio, I take the higher risk on in the beginning in the portfolio, because worst case scenario, even if you're starting with 5 or 10 grand, to lose half of that in taking an educated risk. Now, obviously, I don't want somebody to go out there and buy something because I told them to take on risk and then lose it. But at the same time, if you're young and you're just getting started out, that's what changed my life into investing, was when, I bought Canopy, and sure enough, it dropped like 40% when I was holding it in the beginning, but I held on to it. I believed in it, did my homework, saw what was coming 2 or 3 years later, because nothing happens overnight. And just like you, I never really dabbled too much into swing trading. I kind of focused on the 3 to 5 year term with my short term plays. And that was the stock that took my portfolio up to, $40,000, $50,000. And from there, it was just onwards and upwards. But after that, I took on substantially less risk. A lot of people think with the 12 stocks I hold, it's risky, but I think I was doing way more risk back then. But again, way smaller percentage, right? So like you're saying, it's hard to tell somebody. You can only kind of give them certain directions to point into, because there's so many variables with jobs, location. Are you supporting a family? Like yourself, are you living at home? Are you able to be a minimalist? How much can you save? So I mean, it's a real tough decision on that aspect. So I mean, even today with the money I have, I'm constantly running options. But like I said, I'm finally at a point where I'm really happy with my portfolio for where it sits. But I still debate on whether, am I better off leveraging a little bit more into those higher growth stocks. Is 30% of my portfolio. I just did an update today. 31% of my portfolio is made up by primarily growth stocks, which I would call my Apple, Microsoft, and Tesla. But they're starting to outpace my ability to add capital to the portfolio. So when I watch it keep creeping up percent over percent, I'm like, is it time to maybe take some profit out of these and then redistribute them? Or because I can wait a while, I don't need the dividends yet, maybe I should give it another 5 years and see where these positions can go. And I mean, worst case scenario, if they flop, I'm confident Apple and Microsoft aren't going to flop to any real extent in the long term. But I think that those positions are very well thought out, in my opinion. But at the same time, when you're not collecting that income and you see that, $35,000, $40,000 and what that could do in just dividend income, kind of that itch with that passive investing style. But because I don't focus too heavily on capital gains anymore, I'm kind of out of the capital gain game, except for those few holdings that I hold for those specific reasons. And then I find myself getting lucky, because I'll buy dividend stocks that would be considered high risk, and some of them don't do well. But for the ones that do really well, they severely outmake my poor performing positions on the capital growth aspect, because I'm looking at companies like Southern Company and like some of my utilities right now, and they are on fire in comparison to like my financials. And I've held on to my financials for years.
Some sector rotation going on there. I think if you've paid attention at all to the bond market over the last couple of days, there's some real key telling features there. Hey, for me, I've been doing this a long time, and today was a Friday for me. Am I losing my am I losing my cool based on one day? I mean, I'm prepared for a 34, 40% downturn. But some of the deliberation you talked about, you hit on a lot of key things that I don't think just you go through, because I went through the
Yeah, for
same
sure.
deliberations. So there's people who are going to resonate with this and listen until you go through that. Like, do I sell? Do I this, that, and whatever else? I would just say this. If I was kind of working with the capital, I always say don't try to outthink the market.
Yeah.
And I don't know, maybe right, wrong, or indifferent. What makes sense to me is to do both. Like you had a really good win with Canopy. I see there's people I know who kept it too long and
Yeah.
they got whacked. So it's easier to sit back and say, you know, man alive, I should have done that, should have done that. There's been so many times, Kyle, that I have kept a stock and I was tempted to go ahead and take some profit where I didn't, and only to watch it come down. Disney was a pretty good example recently, where I could have trimmed position when it ran up, when they picked up 10 million subscribers, you know, and it just ran up quickly for no real concrete reason on the monetary side. It's just they were picking up subscribers, which I
Yeah.
think eventually is going to be a good thing for Disney. But that you don't get those injections in the market very, very often, but they are common. You will get them. And for the majority of them that you take a profit in and then you see it adjust back, now you can rebuy the position and actually look into not only swing trading, but channeling the stock, right?
So
So,
I actually looked through the last 50 years of the S&P history, and it turned out on 1/5 of the percentage, it had a 30% run. So that's why I always kind of like paying attention to see what the market has done historically. And it's neat to see that 1 out of every 5 years, you usually get one of these incredible runs that happen. But like I was saying earlier, when you go to sell your positions, like you can sell them on the valuation aspect, but I think you're giving up on that future potential. Because the thing that I have an issue with is I got to go and buy something else, and I honestly don't think I can buy something better than an Apple stock for the time being. So for me to leverage down in it's soul crushing to me to sell something on the idea that the stock, unless again if it's a pure spec play, you have to have an out price with Tesla, things like that. At some point you have to sell it. But with those more passive stocks, I think you're better off not selling it for a reason based on a run up than you are selling it on a reason that is an underlying reality of the company. Because I remember selling Constellation Brands because I love Constellation Brands because it owned Canopy
awesome.
Growth Corp. And
Yep.
I love the exposure to that sector without the huge risk in being backed by $1 billion corporation. And the day I sold it was because they fired Bruce Linton. And when they fired him, it wasn't on solid fundamentals. It was on the fact that he wasn't making enough income for the company, but that wasn't his fault. It purely came down to funnels and how the government was allowing it to be marketed. And I couldn't believe they could fire somebody because of the way the funnels and the government had set it up. Because it's not like it was his fault for a guy that took Canopy. He was like the hammer and nail to the entire sector. So like that was what made me sell it. I didn't even have to think about the stock price. I made a profit on it of like 5 or 10% at the time, but I couldn't even care because when I see news like that, it's usually what drives me out of this stock. And I think it's more important that if people are holding really solid companies, that maybe they should try and focus more on those core fundamentals. Because I like the Warren Buffett aspect of, I'm young. I'm going to be holding on to these companies for maybe 30 or 40 years.
Yep.
What could they do with me, or what could they do for me over that 40-year time period? And to see a 1 year blimp of incredible gains, I try not to justify, making rash decisions and quick profit gains when I know that, the next 50 years from now, that could happen another 5, 10 more times. So, I mean, that's the angel and devil debate again. I'm trying not to let the greed and the casino-like gambling take over my decision-making, right? So, I mean, I'm not buying, if I was buying an S&P index, it would be a different story, but I'm not. So I constantly have to play the psychological maze of making sure I don't F everything up and
Yeah.
start over trading and playing with the bar of soap till it dwindles away.
See, I was watching, and the favorite strategy of the group is dividend growth investing. It's a majority holding in both of my larger portfolios, and so it speaks to how much I believe in the strategy. Okay, but my move today, right, with the VYM, that's a 3% yield or 400 companies, piece of cake, you know.
Yeah.
And I want to make sure that we have time. We come on here every Friday and we all get different perspectives from different investing, and we always want to take a step back and say, is this really the best? Or if you're doing something exclusively with your strategy, are you missing out on other strategies out there? And I wouldn't have outperformed the market last year, Kyle, without swing trading, without channeling stock. So I would have been an underperformer of the market. That is unacceptable in this game. It's
I'm
unacceptable.
so glad you said that, because I get in an argument with so many people over the fact that if you consistently underperform the market, that is unacceptable. And too many people, coddle over to not, smartening themselves up to that reality, because as investors, whether you're behind a bank desk or sitting here at home, you all have the same dilemma of you need to get at least market average returns. And if you're not, you need to rethink your entire investment strategy.
Do you have to outperform the market if you've got a portfolio like a Gen X dividend investor or a PPP, Ian? Right?
I still think to an extent, I would not, in my personal perspective, even if I had $1 million in the market and I wasn't buying, say, S&P index funds, and I underperformed the market, I would be severely saddened with the way I was investing, because like I said, we're all trying to keep up with average market returns. And again, if you're just focused on that dividend income, that's fine, but you're not going to be playing the real game of making any capital gains, because even so, the dividends are great, but if those stocks don't go up and they consistently stay flat or go down, you're not really getting anywhere. And I know the idea is to collect the dividends and not focus on the capital gains, but if you gave me your money and I showed you a less than average return, I would be miserable. I would not be happy with that outlook. And a lot of people got pissed at me when I started telling them, like, look, if you can't do this consistently, just buy the index and start pulling cash out once in a while and taking profits on it. You need it.
I would be kind of careful too. Like I'm the first to quantify my statement when I say that I outperformed last year by a couple bits. I had a comment come to the channel and they were like, Ryan, was it worth it? The answer is no. No, it's not worth it. It's not worth it. Because here's the thing. If I thought for a second I could look in the mirror and say that I could do that consistently, arrogance.
Yeah.
Arrogance. The fact of the matter is most people can't do that. Okay. Now, I don't want to put a Debbie Downer on the live stream. I want to say, because we all come in here and investing is fun. Like we have fun with the live stream. We have fun kicking out ideas. And I like conversation like this because you can really extract different strategies to deploy. But you're right. There's a different philosophy if you're sitting with a larger than average income, for example, and you have the real luxury of parking that money in good dividend paying companies. Why? Because you can take a larger position in it and really start to manufacture those positions in a way that you get the compounding growth right away. If you're looking to spend your whole life to build these positions into something special, perhaps maybe you need to look at the prospects of just passive investing, because that is a guarantee. That's a guarantee. If you buy the S&P 500, that's meant to mirror the performance of the S&P, and it does.
Yeah.
So I think you're absolutely right. I just think people need to be really careful. I hope there's not, I know everybody wants to get excited about free money. You get that first dividend check and it's like, yay, this is amazing. Or you watch videos like a Gen X dividend investor. And I typically, I think I've placed one video in my catalog that actually showed the dividend income for a month. That's all great and plenty. But to be quite honest with you, I don't do somersaults when I get dividend checks. I really don't. I mean, I took the risk in the stock. It'll go to the underlying stock and be reinvested anyway. But I'm really more concerned with being critical year over year, how the portfolio is performing. And, it's hard. It's really, really hard to outperform. It's a lot less difficult to match the market. And most people do underperform the market because let's be real, if you're going to buy the S&P, that's great, but you don't have any small cap exposure. You want to put some small cap exposure in there. Small caps underperform for a year. Well, that drags your portfolio down. I saw Dave with Hidden Freedom Investing put in the thread here that he owns a little BND. I do too, right? I've got a whole 10%, 11% of the portfolio is fixed. That's a drag on the portfolio overall, right?
Yeah.
So
do you get I think the big drag down, like when you're collecting those dividend income checks, and the thing that might hinder people the most from it too is when you get those bad years and you're collecting dividends, but at the end of the year you look at the portfolio and it hasn't gone anywhere. So I mean, it's hard to find that nice balance of making sure the dividends can grow too. But I think if you can hold on, if you're buying individual stocks and you've been in the game long enough, you should be able to buy the right companies and still able to sustain a half decent performance. And if you're really lucky and you're buying the right dividend growth stocks, sure, they may underperform for the first year or two, but if those dividend increases come in and you start attaining what me and you talked about before, which was, building capital gains in your portfolio, and you get a few years under your belt of some good years, like, I mean, your dividend should already outpace the portfolio. I mean, my yield on cost right now on my one of my accounts, I think, is like 7.8 or 7.9%, and the portfolio still grows by 10 to 20% a year aside from the dividend income. So I mean, like, that to me is just like, it is the awe-inspiring what we're all trying to achieve as dividend investors, right? Is build it up and hopefully get some diversification to the point where our dividends can even outperform the general markets. But I still made a critical statement on my YouTube channel where I said, look, the day I consistently underperform the market for a couple of years, I'm done. YouTube will get boring because I'm not buying any more individual stocks, because I'm trying to keep my mind in that set that, like, look, if you're doing it wrong and you're putting all this work into it and you can't even get close to like a Vanguard, a VOO, or SPY, like, why even bother? I mean,
I would also say this, Kyle. There's another little twist to what you're saying. You're right on the money. We'll say this: if you can't do well, or do well in a market that's been provided over the last 10 years, okay, the effect of your portfolio to the downside as well isn't to be missed here. Okay. It's how does your portfolio stack up against the benchmark in a down market? Okay. Because my perspective is that somewhere down the line, this year, next year, 5 years, who knows, we're going to have a stock market that is one that I'm used to. And when it goes
bearish.
down, like you said something when we first jumped on here, everybody's like, yeah, today, this and that. And it's like, today's a Friday to me, right? You have got to get used to, not you, but that crowd.
Yeah.
And I said it. I said, I mean, I'd hate to say I told you so, but you watch what happens when this market does end up acting like a stock market and not a vehicle for guaranteed wealth. And I say that I think there's a lot of people with unrealistic expectations about how bad
100%.
it can get. And
It's the same thing with my buddy wanting to buy Tesla now. Like, there's so many people that are willing to hop in the stock market because they're just seeing these absurd capital gains, like you saw in the MJ sector, like you saw in Bitcoin.
yeah,
But by the time your friends are talking about it and they've never invested a dime before, like, it's too late. And they're going to get in and they might see a quick pop. They're going to try and hold on to it. And it's going to do what you said in a year or two, or who knows, maybe even a month. We could see a good, decent 10, 15% correction. And that'll be the first downturn they'll experience. And that's where your gut sinks, because, like, I was holding Tesla when it dropped to $170, and I was holding it from the 300s. And the criticism that I was receiving when I was down 40% on the position was absurd. And now, like, I try and tell my buddy this because I'm like, nobody cares when the market's down. That's the problem. It's like, you're used to it and I'm used to it, and we can see it in our portfolios. And yeah, we have capital gains built in, so it's not going to hurt us as bad. But I feel bad for the people that have missed this absurd run.
You speak like a very mature investor. You really do. But I got to tell you, man, when I was your age, I said the same thing you said. And then the first time it really hit me, I think it was around the Brexit. I think that was about the first opportunity I had to be like, wow, this sucks. The 2000, 2001 tech bubble, I really wasn't invested enough to really feel that. I felt that one. I really did. And I absolutely felt the 09, 10. That was the the last one. So 11 years ago, I felt that one.
How much did your portfolio drop by back then anyways? Because I didn't even know it was happening because I was so much younger. I think I was 16 at the time.
Relatively speaking, I mean, I dropped last December, I dropped $25,000, $20,000, something like that. Stayed true, didn't do a thing, rocked it out, Um, But
So that was
yeah,
what, beginning of 2018, you're saying, when we had that little correction,
yeah, in
or are
December.
you?
In
Yeah.
December, yeah, yeah, and that's
Yeah.
how
Sorry, I was
violent the
thinking
market.
2008.
On the way down, it can get super, super violent. So I've got Quest to Fire who's waiting to kick on here. I would love. You want me to bring her on as a try, Kyle? Are you good on your connection and all that stuff?
Yeah, yeah, I'm doing good. I'll stick around for another 10 minutes just to say hi here,
You
because
got
I'd
it.
love to
You got
see.
it. Because I'm gonna give the mic over to Quest to Fire. She looks ready to go. So,
Get her on. Get her
I'm
on.
gonna bring her on for sure. That's great. I I
I'm
I
not
coaxed
sure
her
how
into
ready
coming
I
on.
am.
She's on lunch break. She
Yeah,
finally
and the
got lunch
audio is
break.
perfect.
Yes. Yes. Oh, good. Good. Yeah, I really am at work. That's my ultrasound machine back there.
Oh,
So,
wow.
No
Do
yeah.
way.
you work in a hospital then,
That's
or are
great.
you?
I work at a standalone ER, so even though I'm clocked out
Wow.
for lunch, I still keep an eye on who all is here. So, I could have to clock back in at any time, but I
I
figured I
just
would
took
give it a
the
shot.
I just took the liberty of subscribing to your channel because I noticed you comment a lot. And once in a while, I start opening up the channels, and I had to subscribe because I keep saying there's just not enough female presence in this market to try and bring other people in. I've only noticed a handful of people, and I've invited them on streams and chats, but they're just far and few between. I know Lydia was on here too, and I should have shouted her out because Lydia's been a good true follower for a while. But we'd love to hear your perspective on investing.
Yeah. Well, my perspective is that I'm very much a beginner. I don't claim to know very much about it at all. In fact, my main strategy is just the passive investing, primarily index funds, and I'm trying to learn more about dividends. So that's why I watch all of these different channels and, try to glean what information I can. And yeah, one of these days I'm hoping to get that dividend portfolio built up.
Congratulations. Wow. So how long have you been investing for then?
I'm still trying to get that first 100,000 built up. I've been
Oh, the
investing
first.
in it. Yeah, I've been
I just hit
investing.
that mark.
Oh,
That's
well,
that's a good amount of money, relative
But
yeah.
to
10 grand,
everything.
10 grand's a good amount of money.
We
I
we
mean,
are a
Oh,
lucky
yeah.
bunch here. Let's keep some perspective. We're all lucky,
Yeah,
My goodness,
for
the
real.
ability to invest is just awesome, you know.
I only point out that 100,000 actually because they say that's when you really start to take notice of compound interest. So I'm
Yeah,
still trying to get there. They say that's the hardest to get is the first 100,000.
I say
But I've been
10,000.
investing through my retirement account at work, and I've only recently started investing outside of that. Actually, last year was the first year that I have ever contributed to or maxed out a Roth IRA, and I'll never not do that again. So, yeah, I'm still
Every
in the
year,
very early stages.
Rebecca, every year that comes and goes where you don't contribute, you're losing that benefit, Even if you don't max
Mm-hmm.
fund it, even if you do 25%, at least you're taking that benefit back. That's kind of the way I look at it, because you just can't get those opportunities back, you know.
Oh, yeah.
So
Yeah.
that's really, really cool. You're leveraging both an employer sponsored program, and then you did what I always talk about, layering up and taking that additional opportunity for yourself. So
so I
Yeah.
got an interesting question. Sorry to interject here. Just for people that are watching this that don't know you that well and your investment philosophies, considering you're trying to do the passive side of things, how much are you contributing, if you don't mind sharing with us, maybe some of your personal finances, how much are you putting away a month? You're obviously buying some index funds, but would love to hear about it.
Yeah, I actually do share my real numbers and my monthly budget every month on my channel. And right now, I am contributing up to my employer match at work through my retirement account there. So that's 7% there. And then they match up to 3%, and then an additional like 0.5% up to 7. So I've got that. And then I max out my Roth every year from now on because you can't get time back. In addition to that, I'm actually at this weird space in life where we may be selling my home and building a house. So I'm trying to save up a little bit of extra cash just to have on hand for expenses related to that. But overall, me being in the fire movement, I'm trying to keep that savings rate up there. I am definitely more on the save more side to reach financial independence than I am earn more, because I already work a full-time job. I
Yeah.
really, of course, multiple streams of income are good, and I'm working on that. My YouTube channel is almost at 1,000 subscribers,
Yeah,
but
keep up.
yeah, I just save as much as I can. Actually, my savings rate this month, I did a no spend for January. It's the highest it's ever been. I've got it up to 56% this month.
Oh, wow. Good for you.
Yeah.
So I got another question for you too. Do you have a family? You were saying that you're looking to buy or fix up a place there. Do you already own real estate, or
Yep.
what's your personal life is real estate, and what's your family life like?
Yeah. Married, no children, but my husband and I, we live together in our house. So the house I actually bought for, I met him, and I'm in rural North Carolina, so real estate here is very reasonable. I bought
I wish.
just a 1-bedroom, 1-bath house. You'll probably die, but it's on 5 acres with a pond, completely fenced in, detached 2-car garage, 105,000.
Mhm.
So
They don't
goodness.
tax military retirement. I'm in Virginia Beach, so it's expensive.
Oh, are
here.
you?
Yeah, it's expensive.
Yeah.
In Canada, it's insane. Canada is ludicrous.
Oh, yeah.
Like an average junkie home here is $500,000. So I mean, in US it'd be around 400. And I keep looking at Florida. I'm like, I can buy a home in Florida for 100 grand. Maybe I should just go down there, because I could put a deposit down for 10 or 20,000 US and still have my portfolio. But so I'm living with mom here at home, because it's just. I got to get my girlfriend's life together, and maybe we'll move out and go rent somewhere, because doing it on your own would completely abolish my portfolio, like building it. It's tough here in Canada. I feel horrible, but lucky you. Congratulations. You got a great job, husband, you're rocking it.
Yeah. I'm trying to take advantage of that situation. I realize, our mortgage payment is $687 every month. That's
part-time job
I'm
work
trying
right there.
as I can. Yeah.
Especially if you're splitting it with your husband too. Does your husband work?
Yes, he does. And we do split the bills evenly, though. I pay the mortgage, he pays for other things. It works out in the end.
Yeah, for sure. Congratulations, though. I mean, that's awesome, and it's nice seeing you come into the community. I'm actually just scrolling through your YouTube channel right now. I'm glad people are subscribing to it. Maybe we'll get to that 1,000 mark, so you can start making a bit of extra passive income from that too.
Yeah.
But that's awesome. So, how long have you been working there for? Has this been a full-time job for a while?
Oh, yeah. I've been here, come August, it'll be 4 years. And before that, I worked 5 years in Charlotte, North Carolina. So I've been here for a while now. I like it. It's a 3rd shift gig, so I'm here all night, which is why I usually can make the live streams, but very rarely do I get to come in. So, it's always just a bet whether or not I'm actually going to get some work to do and have to clock back in and, get back to the grind.
Yeah, but this is brilliant, though. Like, I can't say thanks enough for popping in here, just because, like, to see the perspective of somebody that's actually at a job, actually working, and, not just chilling out, having some perspective to put in here is unbelievable. So thanks so much for taking the time, for sure. So I mean, you're still pretty fresh to the investing side of things. Have you planned out, like, have you messed around with a compound calculator and kind of figured out maybe like a year-to-year plan on how long it might take?
Well, when I first got into the fire movement, I was like, oh, I need to calculate my financial independence number. That seems to be what I got to do first, right? And so I started messing around with some of those calculators, and the figure that I came up with was actually $600,000, and I was like, that can't be right. I need a safety margin, so I think I'm just going to double that to be safe. So. I'm aiming for 1.2, but we'll see if maybe once I reach lean fi what I decide to do. But 1.2 is the goal, and a timeline I don't really have yet, because there's a lot of big life changes that may happen if we decide to build a home. So I'll have to factor all of that in whenever I get there.
At least you got the equity value in the house too. Like, to have the combination of the property and the stock portfolio is one of the most intelligent things I think anybody can do. Because I have a problem here, which is most people will just buy real estate and not get into stocks because it's either too expensive on one end or the other. But the problem is, when you buy real estate, especially in a place like here, it's 100% of your income. and you're not going to be buying stocks, which means you don't get global exposure. And in Canada, if you know anything about our dollar, it dropped 25% over the last 5 years. So, I mean, even if you just held a US dollar, like you made a 25% return over the last little bit. So I don't think people realize how much that hinders them. And there's so many things people begin to overlook. But I think you're in such a prime position to just inspire people and, start sharing your journey, which is really, really cool. But yeah, congratulations. That's all I got to say. I'm going to let
Thanks.
Independent take it over, and I'm going to continue to watch on the back end here because I got some stuff to finish up. But such a pleasure. Thanks so much for having me on, Independent here, and I look forward to listening to you. So stay cool, stay awesome, guys. I look forward to chatting to you all soon.
Thank you, Kyle. Really cool.
Bye.
So there hasn't been very many people that I've talked to that haven't had great things to say about North Carolina. So I'm getting closer and closer, and we've yet to visit, and we're 10 minutes away from the border where we live. Yeah, so I've got to get down there and check it out. That's really cool. It's just
everyone moves here.
Everybody wants to move there. A lot of people that I talk to want to retire to Florida as well. It's just super hot, Yeah. So, but I don't know. It just kind of spoke to what I was talking about at the live stream. How everybody's got their different little things that they're working through to get that personal wealth. And I think you said a lot of things that stuck with me about leveraging your employer sponsored program and layering up and taking that match, the free money. There's so many people out there that can benefit from how you're approaching that, because so many people, they just do it and they forget about it and they don't realize that there are other opportunities. Now, money is not easy to come by for some people, but for those people that don't even realize that it's an opportunity, did you tune into YouTube to get that idea, or did you have that idea to really pursue that on your own? How on that? I'm just curious.
Well, actually, this whole entire personal finance journey for me did start with YouTube. I realized a few years ago that the amount of debt that I had was just stifling. It was going to make it such that I would never really be able to retire comfortably. And I just knew month to month I wasn't budgeting, and every paycheck I earned was spent before I got to keep any of it for myself. So the first thing I did was, start looking at how to get out of debt. And I went through the Dave Ramsey rabbit hole on YouTube first. And from there, my knowledge has, broadened a little bit, discovered the FIRE movement and went down that rabbit hole and really have stuck with it. And because that's, what speaks to me.
Can you explain,
I decided,
can you explain the FIRE movement for people who may not be familiar with it?
Yeah, it stands for Financial Independence, Retire Early. I tell people not to get hung up on the retire early part. I think it should be financial independence, recreational employment, personally. Because if you're financially independent, then you're able to choose what to do with your day when you wake up in the morning, and you can do whatever it is that lights you up. And if there's some side hustle thing, like I really enjoy doing YouTube, but I couldn't ever do that full time right now because I'm not financially independent. I need this job. I have to come here to work every day to support my life. But if I reach financial independence, then I can really focus in on what it is that I like to do from day to day. And that really appealed to me, and hopefully I'm still young enough that I'll be able to reach financial independence and retire early too. And I thought that I figured I would start my own channel just to document that journey, because there aren't a lot of women out there showing their investing journey. And I just wanted to show that people on a middle class income can do this. I just have my associate's degree. I work my W-2 job every year, but I'm still just doing the same thing that budgeters do, cutting expenses. And I'm trying to maximize the difference and invest now to build wealth for the long term.
Oh, wow. I just, what you said was so awesome. So many people, if they realized that it was more achievable and they give themselves that shot, I really think it comes down to a desire to do it. I really do. When I first started investing, I pursued investing with ferocity. and didn't really know. It just felt right. And I wasn't shooting for millions, quite honestly. I was not doing that for that reason. I just felt like, um, based on a few things that I was turned on to, a few investing philosophies that I really resonated with, it just made so much sense to invest, you know, and it made way less sense than to save for my future. And then I started to get those little validations. I'd meet people and I would talk to people. You talk to people when they're retired and they look back over their life and they're happy, but they look back and they say, man, I just wish I would have done that. I wish I would have done a little more. And I can't tell you how many people, I don't know if you've experienced that as well. And there's a touch of regret. You know, we all, none of us go through life and it's perfect, but there is a little touch of that. Hey,
Right.
could I have done more, you know? And maybe when you look back, you can say, but you know what? I did everything I could do. I made mistakes, but at least I tried, you know? So I just think that's
Everybody wants to
amazing.
start sooner too. Yeah. I
Well,
put out there one of my
true.
earliest videos was documenting all of my mistakes that I've made financially. So hopefully if people watch that they'll learn and
I got you back.
one of my biggest sorry mistakes actually talking about investing is one of the things that you know you should do, and I was doing it in my 20s. One of my biggest regrets was cashing out that 401k twice. If
I did it
I
too.
had if I really knew how interest worked back then, it's one of those things you just don't do. So learn
Yeah.
from people make that mistake.
Yeah. So it kind of brings me back to a question, something you said earlier about saving for a house. If you wouldn't mind, I would be curious to know if you're trying to save for that down payment separately. Because I get this question all the time, and a lot of people want to invest to make more money for that down payment. And I'm not really an advocate of that. I really think you should try to keep those two things separately because you run the risk of putting market money to risk. And then your down payment is, you know, fluctuating. And that's not really what the goal for that money is. But what's your thoughts on that? What are you trying to do?
I agree with that mindset. I think, um, investing it tilted up its idea at face value, but really it's just too risky. If you're going to need that money in a few years, you just are going to do, and you don't want to risk needing that money and have the market take a downturn, and then are stuck and you don't have it. So for our situation, to build is to buy land first and get it paid off. And we can use the value of the land as a down payment for the construction loan. So, and since we're already in a home, there's really no hurry to sell the house we're in. The money I'm saving up extra is just mainly it's for home improvement projects where we're at right now so that we can get the most value out of the home we're in when we do sell it.
You worried at all about the current real estate values? I think where you're at, it's kind of under control a little bit, but I think I'd be a little bit concerned if I was in some of the other markets. You know, at least with what I see here in Virginia Beach, it seems a little bit elevated, which has kind of scared me off of the market a little bit. So I don't know if you're subject to that in North Carolina. I think it would be a little bit more tame, but I don't want to speak for it. I've never been there.
Well, it really depends where you're at in North Carolina. Where I am, property values are not super high. You can find expensive homes, but we're below average as far as home values go. And, with me buying my home so low already, I'm really not too worried about what we'll sell it for. I mean, I should at least be able to make some decent money when we sell it and get some good value back out of it. The only
Yeah.
thing that worries me about selling the house is that it's just a one bedroom and people may or may not be looking for that depending what situation they're in. But I bought it so low that I'm not too worried about the market where I'm at locally.
Um,
And
I So on the investing posture, how long have you been investing, and you're shooting for that first 100,000? Have you been pretty aggressively funding your accounts, and what strategy are you looking to kind of deploy that makes sense for you?
I've been investing, well, like I say, I did originally start in my 20s, when I first graduated college and got my first real job,
Me
but
too.
shot myself in the foot, cashing all
Mhm.
of that out and paying the penalties. But since I've been investing through my employer right now, I'm getting up to the match. I still have debt that I'm working through. So that's why I haven't done any extra. But just with the way the markets have gone, my accounts are still going up pretty great. Now, it
Yeah.
wasn't until recently, as recent as last year, that I actually took a look at my retirement account to see what I was invested in. When I first started working here, I just, ticked some boxes like everybody else at orientation and did investing, but I couldn't tell you what I was invested in when I first signed on with this company. But now I do have some control over that and a little bit of knowledge to at least be able to choose. And thankfully, they have Vanguard index funds for us to invest in through our 403Bs. And having
Ah,
learned more,
awesome.
I requested, I know that there's a 457 with my company, but
Mhm.
it is purely for executives and high earning physicians. So I don't
Okay.
qualify for that, unfortunately,
Okay.
but that would have been a good vehicle to take advantage of.
Okay.
Maybe one day.
Well, I think it's great. I've looked at a lot of 403s over the years, 401ks, and they're all over the place. I think traditionally that you're paying a little bit of expense for access to those funds. Hopefully, they're fairly low. Hopefully, because if you buy them straight or buy the ETF underlying, they're very inexpensive. But I'm not sure how the prices are elevated or if they just carry over into the 403.
Yeah, for my company, if you're self-directed, I don't believe that they charge me at all. I
Nice.
just pay the expense ratio I have VFIAX and the total bond Vanguard market VBTLX, I believe.
That's all you need.
Yeah, I'm keeping it simple. That's
Oh my
that's
gosh.
where I'm at right now with my knowledge level. So I don't want to
I
overly
don't know.
complicate my
I
retirement account.
I, I think if so many people could see past that, and I think it's one of the soundest ways to invest. I don't mix being a new investor and therefore not wanting to touch single stock. It sounded like you do down the line, but I always talk about that passive baseline as being so important because I know a lot of people are going to tune into me and you, and they're going to be like, how does this person seek out their exposure? What can it mean for me? And what you said, a lot of people say to me in that single stock kind of is scary. It scared me. I mean,
Yeah,
I just did single stock for the first
yeah,
time 8 years ago, you know, 8, 9 years ago or so. I bought my first couple
yep,
stocks, and it was like, I really didn't consider it to be as accessible as what it was. But that's the learning curve. It's kind of cool to come onto YouTube and be like, no, no, you can do this. And make no mistake, even with those two Vanguard products, you are an investor. Those are serious products. Just they're low cost, they pay you a dividend, and they're diversified. What
yeah,
more could you want? I think it's wonderful. So good
yeah,
on you. That's really cool. Goodness.
yeah. And thanks for having me on
Uh,
tonight. That's awesome. I'm glad I could squeeze it in. I've only
I
got
am
two
too.
minutes left on my lunch break, so I'll have to bow the clock back in here, but it's been awesome. Thanks for having me on.
Absolutely.
I will continue to watch.
Super cool. Thank you so much, Rebecca. Have a good night, okay? All right, guys. Man, that was really cool, man. And you want to come back to the devotion piece that I talk about. There was a lot said there that are a lot of big takeaways. Honestly, I think the appeal there for any of our younger investors, whether they're male, female, and they're coming up through and they're just feeling this opportunity out. I think hearing it from all kinds of different perspectives is great. I try to reach everybody. I really do. But I know the reality of it is such that I'm not going to reach everybody. And that's why I really try to stress the importance of taking away each individual situation and understanding that perhaps maybe there's others out there in other cities across the world that are also listening in and being like, wow, I'm also working. I'm also trading some time for money to make ends meet. That's exactly what I'm doing. And I think a lot of the times people just kind of disqualify themselves from being a good candidate for investing. And I would say, Rebecca talked a little bit about dealing with some debt and some poor decision making in the 20s. Been there, done that. And I wouldn't change anything for the world, because the appreciation that I have for why we do what we do now, why a volatile day like today to me is just a Friday. It really is. It doesn't fade me at all, because I think the perspective that I talk about all the time, there's a lot of folks that could probably say, yeah, okay, Ryan, yep, cliche, yep, stay the course, whoop-de-doo. I'm just disconnected from my money. I'm not emotionally tied to the money now that I've got it subject to risk. I'm very aware of the risk reward, and you can't just invest for the reward aspect of it. It doesn't work that way. You have to recognize the risk reward, and you have to adjust accordingly. So you've got to be able to take whatever investment capital that you have, and you've got to be able to scale your risk. You have to. With this market in its current condition, I'm going to bring Dave from Hidden Freedom Investing on pretty quick. He just stepped in the back door to the studio. Really appreciate Dave making his way on. Very cool. But I just think for a lot of new investors, man, there's a lot to learn. I really do get it. But I think Kyle spoke on it a little bit. When you're talking about the deliberation that a new investor will go through, you have a company out there claiming that they have a cure for the next disease, and you want to jump on that company. That's the first thing that you're going to do, because you're going to take that 500 initial starting capital and you're going to double it. That's your goal. You want to get that money going as quickly as you can, and you cannot justify entering into an index product or an ETF or a dividend paying stock and watching it do what it did today, and that's go down. you know I put the doom and gloom on it, then I laugh a little bit, because quite frankly, it just doesn't faze me anymore. And if there's a card out of my playbook that you guys can take and deploy for your own, I'm really trying to streamline some of the perspectives that you absolutely have to have in the market. You have to. If a day like today bothered you, readjust your scale, and make sure that you're allocating what you're comfortable with. If you're over levered to the market, trust me, you're going to get a jarring revisit of your risk tolerance. Trust me on that, okay? Because there's nobody in this group that's going to enjoy watching their portfolios down, okay? Nobody. All right. So with that, I'm going to bring Dave on from Hidden Freedom Investing, man, and we're going to wrap some more stock market investing or real estate or wherever he wants to take the conversation. Maybe we'll talk real estate notes, man. I'm still curious about that whole thing. So,
hey, Ryan.
man,
Can you hear me okay?
Yeah, man, I got you great. Thank you so much for coming on and helping.
Yeah, I thought I'd take this opportunity real quick just to pop on before I head out to the store. But Happy New Year to you and your family.
Same to you, brother. Really appreciate that. Yep. It's like getting back to reality, to be honest with you. The holidays are funny, like eating baklava and like justifying dessert every night and whoop-de-doo, time off of work. Now we're back to the grind again,
Yeah, no, it's been busy at work for sure. Now, you had me at baklava.
Oh, God, I know. You just justify everything over the holiday. You're like, oh, that's okay, man. I'll take care of it in the gym in January, which is what I've been doing, paying for it. I don't know, man. Life is good. Life is good. I mean, so the last video I caught of you did a portfolio review, Dave. I thought it was really, really good. really good. I need to build that spreadsheet out the way that you guys have that. The way I do my portfolio reviews is I grab it right from the account. But I like the metrics that you guys are tracking there. Do you find that helpful for you? I'm being a little greedy here and asking for my own benefit, but
No, that's fine. No, absolutely. I do find it beneficial for me because my portfolio in Google Sheets is actually 2 accounts. So it's the same thing that Gen X does because he's got a taxable account and a tax deferred account. So I'm doing the same thing basically. So I got it in one view. So other than that, it's kind of hard to track both accounts in one view, right? So that's kind of the main thing that I like about Google Sheets, and specifically in this case here.
is your audio up super loud, Dave?
I can turn it down if it's bad.
Just a touch. Bring it down a couple. They say I'm too low.
Is it my mic that's too loud?
They said is it a little bit? Yeah. I'm still testing out all this new equipment. I'm so stoked that JMac turned me onto this camera so you can see every single deficiency on my face. This is awesome. It's just so crystal clear.
That camera is clear.
Dude, it's legit, man. I'm like looking at it, it's like scary. Never seen myself this way. Jeez,
is that a one of those Logitech C920s?
Yeah, man. Yeah, it's really good. I didn't like the quality. I was just using the iMac, the webcam, and the quality wasn't that good. This is awesome. Yeah. So
I'm curious to know which microphone. Let's see here. I think it's this one, but is that less?
That's way less. Turn it back up a little bit.
How about that?
You're perfect. Yeah.
Okay.
Awesome. Thanks for that insight, Dave. I really appreciate it. It was really cool. Yeah, I don't know, man. 2019 was a cool freaking year for me because the community for me really accelerated. You know, I kind of felt like I was with, a few folks when we first started on YouTube. Now they're all vacationing in Cancun together because they're all YouTube superstars. And I was like, I don't know, man. I work a regular job, and
I do as well.
I kind of resonate with those folks that are just working, and investing is just part of the gig.
Well, I mean, granted, I do work from my bed most days, so I have the market open right there and in one window. So
nice.
I'm a little, I guess I'm a little spoiled.
Yeah. Now, have you been investing for quite a long time? I know you've had some, I don't mean to say alternative investments, but they are to me stuff that I'm not familiar with. But as far as like the stock market and all that, you work for yourself or with a company, or what's your strategy? How do you layer up?
I've had W-2 jobs since 19 years old, so I've never worked for myself. I do have a flip business and I do flip houses, and I'm hoping to get out of that eventually just because it's kind of a pain. But there was only a reason why I did that, just so I can have retirement funds, in a retirement account invested into real estate notes. That's one of the real reasons why I flip houses. But I do have a lot of money in real estate notes. And if you watched my portfolio video, I'm going to be drawing those down and building that portfolio out. So, basically pretty aggressively actually over the next year or two. So, am I worried about putting money to work? Not really. So
it depends. Again, this is the forever question and the forever conversation. That's why we all come together every live stream, and put out that constant stoking of the message, because it's that important to understand, like what's good for you, Dave, isn't necessarily going to be right for me. And
exactly.
It's not gonna be, right for a Gen X. And I will go one further to say it's okay. It's freaking okay. Those people that have the right way of going about it and they contend that their way is the only way. Arrogance has really no place in the stock market. And, I certainly don't wish ill will on anybody. I don't want anybody to get hurt in the market. But if you think for a second that you got this thing figured out, I think you should recalibrate a little bit.
And I mentioned that in the video. I'm like, my situation is completely different than probably most people that are going to watch the video. I'm, hopefully a year away from retiring. At least that's my plan.
Yeah.
So I need to get this money working for me, get it out of the notes, to reduce that interest income, and that's the whole plan. I will probably go over video on that, but I put quite a bit of money to work this month alone.
Yeah, you did.
And I don't feel comfortable just taking, how much it is and just throwing it in the market all at one time. Not if I'm going to be retiring soon. So I am kind of just putting it in slowly over every single month.
Keeping any side cash, dry powder? What's your goal? I mean, is your strategy to go exclusively to scale into this market and monitor it, give yourself enough to maybe buy down a little bit?
I'm about 25% cash overall net worth, so I have quite a bit sitting on the sidelines. I'm drawing the trading account down. It's kind of a thing that I enjoy doing, so I do have some money that's probably going to remain in there. But for me, it's just like this whole week, last week, is just buying stuff that is discounted that day or that week or the last month. Not necessarily a good deal because we can all say, oh yeah, I wish I had this at 140, when it was 140 in the middle of 2019, right? So who knows if it'll get back there. So
I think there's stock you can buy at any time, Dave.
So like Wells Fargo is a good example. I picked up some shares of that. So
I think you're good there. I still like Pfizer. I like Intel a little less than after today.
I was wishing it was dropping, but that way I could have picked it up.
Yeah. Visa's a weird one in the technology space. That looks good. I'm still a big fan of healthcare. For some reason, I've never had a whole lot of trouble pulling the trigger and justifying healthcare purchases. I feel the same way about financials, but maybe healthcare a little bit more, to be honest with you. J&J is a little bit at the top of a range, but still historically low. And then, AbbVie, I can't remember if I bought a little bit more AbbVie. No, I didn't, but I was looking at it as a potential. I've got 20 shares there. I did take a little bit off in the 90s because it just ran.
I did as well, but I'm getting back into it again because it could a couple of days of drop, and I figured out why not. And I'm only picking things up, 2 to 5 shares at a time. I'm not buying like gobs of money worth of things here. So
Gotcha. I gotcha. Well, what do you have at risk right now? 10, 20, 30? I thought you had about 30 in the portfolio.
It's about 60 now.
60 now.
Yeah.
I think
the goal is to get it up to 100 by the end of the year, which, I really wanted to get the dividends up to 2,000 this year. And I'm already there now. So if I can actually even do better, if we have like a decline 15% or 10%, whatever, I'll be buying on the way down.
I would be surprised if we didn't have opportunity throughout this year.
I agree completely.
I don't know why I say that. I could just throw some wags out there, to be honest with you. The presidential election in November being the one that's right there, straight up, that's guaranteed on the horizon. That may be interesting. We'll see. I think the market will make 10% this year. That's just my wag. I'm throwing it out there. I mean, hell, it could be down 30. Who knows, right? We're a mature enough community. We can kind of revolve around this discussion a little bit and kind of get in the weeds. But I think it'll be up 10. That's just my thing. But it's not going to be without some drawdowns. I think we could be flirting with bear market territory, perhaps maybe at least once, maybe a couple times this year. We'll see what shakes.
I do believe the elections could shake things up a bit. And, if he gets reelected, I have a feeling that the market will, recover and come back up.
I agree.
And probably just go up for the next few years. That's at least what I think will happen. So
I do too. Yeah, I agree. But I guess you're just going to have to pick and choose. So you're just trying to scale this year and just trying to get as much in there, but not be crazy. It's hard.
Exactly.
I'm not to be in.
Like, matter of fact, I'm not too worried about the money that I have in there at risk because it's solid companies. But at the same time, if we do have a decline, I'm going to be putting more in there, maybe more aggressive. So that's my strategy. So I'm kind of looking forward to it, really.
Were you buying today, Dave?
I bought a few positions today.
Good, man.
I added to AbbVie. I bought quite a bit of stuff this week, actually, but
as I hit the button on my trackpad, it went huge. Yeah, I bought a little bit of passive. I think I spoke. I don't know if you've been in here the whole time. my portfolio goal is kind of a split strategy a little bit. The 25% base, I don't know, I'm really sold on that. And then 75% on the passive, the dividend growth side. That's kind of what I'm trying to do. And that's come kind of recently over the last couple of years in getting used to owning those ETF products. I know JMac is really satisfied with Fidelity. I've just exclusively went with Vanguard, win, lose, or
Right,
draw.
right.
I mean, whether or not that's the right way or not, I just think from a product side, it's great to give you that yield, but from the fee side, that's the real takeaway that I was learned up on when I started this 7 years ago. Really becoming more of a self-directed investor is understanding the importance of the low cost. It's huge.
And I have a basket full of Vanguard ETFs as well, and I don't know exactly what I'm going to do with that particular account yet, but we'll see. It is all in M1.
Okay.
It's been good, but at the same time, it's like some days I just wake up and it's too late. I missed the windows.
So that's not quite as bad. So some of the folks come on the channel. It's funny, and I know Matt's in the group here, and he'll probably be like, "Come on, Ryan," but he says it's boring, which it's true.
It is.
Passive investing is boring. We can laugh about that a little bit, but when I monitor how they perform, I don't know. I think it was you that threw in that you got a little dab in BND as well, the total bond.
Small amount.
Yeah.
Right now, bonds are just not a big part of where I'm going. So, but I do have a small amount in BND.
Why the small amount? What's your thoughts there?
I need the money working for me. I don't, I would rather put it in utilities,
Single stock?
single stock utilities. Yeah.
What you looking at right now? I know what you had there. You got the Southern and Duke, right? Which are some of my favorites.
Duke is a recent pickup, but yeah, Southern.
Duke's been on fire, man.
Yeah, Southern and ED.
Okay, nice. Yeah, I really enjoy utilities. Is like the easiest sector to invest in, honestly. It's like it's single stock investing, but it's sleepy money with a high yield. It's awesome.
Right.
But I look over that VPU, which is like only 58 holdings in that ETF. So you basically own them all. And it's kind of like, I don't know, you own some on the high end, and then you probably own some that you wouldn't own as single stock, but you get the 3% yield to boot. So
Exactly. Looks like HM Investor mentioned PPL. I do own that one as well.
Yeah, exactly.
I am just spreading the risk out across, about 4 of them right now.
In the fixed or on the Vanguard total?
No, just in individual.
Oh, gotcha. In utilities, right? Gotcha. And you own those ETFs in M1 Finance?
I do, yeah. I have basically all the sectors broken out to the individual sector Vanguard positions. So
You do it like me?
it's been a while since I've looked at your M1. Actually, a matter of fact, I think I even stuck your M1 in there, but I broke the VTI out or VOO out, either one, out to the individual sectors. Costs more to do that, but
Interesting. Yeah, it does carry a little bit more of expense. I think it's 10.10.
yeah, no, there is some in there that are a little more expensive. Yeah.
Yeah, I'm up 20% on that little portfolio that could.
Wow.
It's crazy. And like the real takeaway for investors that are part of this community that are still hardcore in here an hour and a half after we started. The cool thing about the M1 is those dividends, they all pay at the same time. And when they do, that's a pretty good injection to the portfolio as a whole, rather than just going into, the underlying payment. So it's kind of a cool way, because those sectors are weird. Like you'll invest in technology or look at technology this year being up 45% from last year, and you're like, oh, I got to get in, and you'll get murdered this year. You'll get just taken to the cleaners. And it's because when the sector rotation starts, because people are taking profit off of tech, and they'll rotate it down into utilities, and then utilities will outperform. And I just think the best way to hit that is to own them all. That way you're always
I agree.
hitting those.
And the DCA with M1 is just going to put it in the underweight anyway. So One of those things I really like about M1, I kind of wish that every brokerage out there kind of had that option if you wanted to do it, something similar like that. But
None of them do it, right, Dave?
no, not that I'm aware of.
Yeah, that's
So,
my yeah, that's a really unique perspective, and that's the one reason why I own the two accounts. The aggressive one is to own the partial shares on some of those big name ticket stuff that I really don't want to own Amazon in my Roth IRA.
right.
And then with the sector portfolio, it's just the 11 sectors. That's it. So I dollar cost average it, fund it up. It's kind of like a little money machine. Yeah, it's up 20%. It's kind of an experiment, honestly. I didn't really expect a whole hell of a lot, but it kind of fit with what I thought we could get out of it with M1 Finance. And
Uh-huh.
the portfolio reinvestment was the big driver there.
Oh, I completely agree. No, I'm trying to do the same thing. I'm trying to mimic that basically in Schwab, buying the stuff that's down that day, 2, 3%. So kind of adding a couple shares here and there. So I'm kind of trying to do the same thing. It just requires a lot more work than what M1. M1's pretty simple. $100 you throw at it, and just it goes into
Yeah.
some underweight stuff. So
Yeah, so we're at minute 30 now, and we've got like some subscribers in here and some channel creators, but I'll ask you a question that might give away a pretty good secret. So with M1 Finance, are you with their affiliate program by chance? Let's see
I
who's paying
put the
attention.
affiliate program out there on a couple of the videos I've done, but I don't push it too hard. Somebody wants to sign up, go ahead. Look at my pros and cons I did on it. If anybody wants to take a look at it, the pros and cons and kind of the things that bothered me about it, but and the things I liked about it as well.
There's some things there's one thing I can't stand about it, to be honest with you. I've been pretty vocal about that.
So it was like
I mean,
the trading window was really hard to get over at first, for sure, because I came from a trading background. But
yeah,
the one bank account was kind of annoying. I'm like, it's just so one bank account. I mean, come on, every other place will allow you to have 3 or 4 or 5. So I found that odd, but I couldn't buy stocks the same day I was doing a rebalance. I found that kind of odd.
a couple pretty good questions here in the thread, Dave. If you want to take a whack at it, you can. I would love to stay on that conversation because it's just I caught a lot of heat for my first criticism of M1 Finance. Everybody was like, no way, it's the greatest thing ever. And I was like, okay, it's the greatest thing ever. And like you're saying, I don't accept that. I just invest around that particular void in the platform. That's why I invest with M1 the way I do. Like I invest and I don't sell. I just buy. That's it. Passive investing. I don't care when when are you going to time? What are you going to do? Time the injection point that you get at 10:30? No, you could be buying at the wrong time, or you could be buying the right time half the time. So don't worry about it.
Yeah, I don't worry about it anymore, but it was definitely something that was hard to get over the first time. I mean, the trading window thing, like I just want to be able to, what if they just gave you one purchase that day and it didn't matter what time it was? That'd be okay too, right? Because I always seem to miss the day, or just miss the time by 1 second and it's too late, right? But it's kind of a little weak in reporting as well. And I did quite a few cons on it, but I think, even more pros on it. So there's a lot of good things with M1 as well. It's just there is some things that are so easy for them to fix, wouldn't require much time or money on their side to fix it. So it's kind of a little immature in my opinion. The platform is a little bit.
I don't know if you'd agree with me, Dave, but I think from my chair, I would recommend that each and every person in this community look to get on with a full service broker. There's no real reason not to at least research it. It's free, and I compare the services you get with M1. If you want to keep an account with them, do it. But the bulk of my money is with Bank of America. So, and I sleep very well at night with that. I don't know what it is. I know there's big portfolios on YouTube that have the majority of their money with M1 Finance. I won't be one of those investors. So what it's worth, I do have 2 accounts with M1 Finance, but I don't have the bulk of my money with them.
I don't think I've ever seen a large M1 Finance account yet, but
Joe Carlson's is approaching 100. And he
oh wow,
he invests exclusively with M1 Finance, and he's got good income. He really funds the account aggressively, and he does a great job of explaining his philosophy. It's really quite good.
I really like Schwab's for my long-term portfolios because I have two accounts. I got the taxable and the tax deferred, and they will aggregate them both to one view. Plus, you have the income like window where it shows your income for dividend for the whole year, broken out by the month and all that. So, and I thank All Good for giving me a referral to Schwab for that.
Yeah, I saw her do that. It's pretty awesome. So there was a question that came through about custodial accounts, and Lydia responded here to Minds in Motion. That was pretty awesome. I just started mine for my kids, actually. I started the CMA. It was a UTMA account, Uniform Transfer to Minors Act, and I just started it with a couple $100 per child. So you got to kind of understand what the pros, and I don't think there's a whole lot of con in my book, but a lot of people don't like the fact that they're legally entitled to the money. So that may introduce.
Oh, really? Wow.
I may introduce some level of ethical discussion. I think some parents look at that a little bit different, whether or not they want their child entitled to a certain sum of money, whether it be at 18 or 21, depending on what state you're in. For me, I've got the 529s for the kids too, but that's exclusively for college, whereas this may give them a boost for those retirement accounts. I think that's a really cool gift.
Absolutely.
That I could give to the kids, So yeah,
if I ever have kids, the day they're born, they're going to get an account.
Well, I mean, good grief. They got the independent investor as their freaking dad, man. Sorry. And I told them, I was like, hey guys, congratulations. A couple weeks ago, Dave, I was like, yeah, you guys are investors now. And they were like, I don't know. Okay.
What company you want to buy? Snapchat.
Yeah, right. I bought them VTI. That's what I bought.
Oh, really? That's a good one.
Heck yeah, man. They both got VTI at the same time. So it was pretty
It's the stocking stuffer for the year, huh?
Yeah, pretty much. Yeah, pretty much. So yeah, it's cool. Thank you for coming back, Lydia. I appreciate that. I saw your question pop in there. Minds in Motion. So
was there any more questions? I probably should head off to the store before they get ready to close here. But I do appreciate having me on. I wanted to pop on and just say hello. And I'll try to pop on every so often if that's okay with you.
I mean, you can pop on as often as you want, Dave. I mean,
I try to leave the mic open for other people, so I don't want to.
I think once we start to generate this product a little bit better, I think people are going to feel more comfortable. It was really cool to see Rebecca come in. I've given her an invite for a couple of weeks, and I she's working, and to stand up like that and just pop on at work, I wouldn't have done that.
Oh, absolutely. We hosted, Jamie and I hosted for Rebecca on Monday. So we had her on, and it was a very good experience. We had never really, had Rebecca ever on a live stream. So it was interesting to get into, her mind and where she wants to go and all that. So
I just think as long as we all drive toward where the focus should be, and that's people who are coming on to the niche message. I mean, we're not talking about diet here. We're not talking about life coaching. We're talking about freaking investing. That's what we do. So if people can't find their way to this message and glean some benefit, then I'll stop doing it.
Absolutely. Yeah. All right. With that, I'm going to go ahead and take off, and everybody else enjoy the live stream, and I'll hit you up in the comments.
Thanks for popping on, Dave. Have a great one, man. Thank you so much.
Thanks a lot, Ryan.
You got it, man. Anytime.
Bye.
Yeah, so there was a ton of comments that popped in. I wanted to get to them on that UTMA thing. So that was just something that I took the initiative to do because I didn't really like the restrictive nature of the 529. I think there's some drawbacks between the two. I did drop a video a couple weeks ago on this topic. I just haven't released it. The two released topics, there'll be a couple of deep dives into the portfolios. I did the spider review again because it's performed so well, and I think that's a unique way of investing, no doubt about it. I'm going to drop this. If there's one other guest who wants to drop in here, I know it's not the premier chair, but I'm going to drop the invite. If there's anybody else who wants to come on here and close out the live stream with me, they're welcome to. The live stream is there right now. So you guys feel free. All right. again, my perspective on this thing is interesting. How many people out there are popping on to a live stream every Friday for 2 hours? Not many. Okay. Not many. But for the people who are making this opportunity work for them, then good on you. And that's really why I've been so adamant from the top of this live stream. I've been doing it for a while now. I almost said a couple years, and that's probably not too far from the truth. And it just made sense to me that for people who are taking that little initiative to not only invest, but to start a channel, a YouTube channel, it takes a little bit of courage to come on and want to share your story and believe that your story can affect somebody. And make no mistake, it absolutely can. I'm just a proponent to taking it one step further. I'm a staunch believer in the team. I really am. I think you can. It would be really, really difficult for me to say that I'm not a better investor now than I was even 3 years ago before starting this journey for me. And I think if we're all honest about that, I think the prospects for the future are scary good. They are scary good. And I think the more that we reach across definitely state lines as well and country lines and reaching out as well. I know there's a lot of folks who can't catch the live stream being on Eastern time. But for those folks that catch it after the fact, they're really trying to, because they don't have some opportunities that we talk about so freely. They don't have some of those. So some of the wealth building philosophies, some of the lingo that we talk about just believing in yourself that you can actually do it. I think that that's probably the single most important thing for me. Is for years just a deeper belief that it was the right thing to do and it felt right. And I think investing for a lot of people who join into this community feel the exact same way. And I think it's awesome. Independent investor, are you open to having appearances with novices? No, I absolutely would. I've already had a couple of subscribers pop on. I've got Abram Nar, and I would absolutely jump on that opportunity. If there was a new investor to pop on here, I think it would be fabulous. I'll throw the ears back on and we'll go to work. We really will. Because the reason why this YouTube opportunity is so important, okay, there's a core group that comes in here. And the great thing about that is we all have a common thread of investing. We're all very interested in the topic. There's folks who are just starting to get introduced to the investing option. I think that's a beautiful thing. But I'm not doing this for a social experiment, okay? I'm not. I really, really feel like if we can circumvent and get to people that would not have otherwise been gotten to, then I will not do this. I won't. I have other things to do with my time, but I believe so intently on this message. And that's why I think building up not only the subscriber base, as well as the channel creator community, I think it's imperative that, right now we may be affecting or touching 25, 30, maybe 50,000 people. And I think we need to be up in hundreds of thousands. We need to be reaching way, way more people. We really do. And we'll drum out the riprap. We really will. But I think there's probably a ton of people out there that would absolutely love to get a hold of this message that we, because we're such a new community, have not had the opportunity. And for those folks, that's why I continue to come on and drive this message at least once a week. I think that's nothing. That's a drop in the bucket to really, really try to reach people and reach those people that may not know that this is in their future. But we actually are able to get to those folks that may not think they're looking for a message like this, but I don't know. It was kind of cool. I want to take this opportunity. I want to thank the channel creators that made their way on. Kyle, and Rebecca, as well as Dave with Hidden Freedom Investing. Okay, if you're catching this live stream after the fact, those 3 channel creators, if nothing else, there's a reason why I do this. I'm really leaning toward this collaborative effort that we put forward every Friday. Why? It's because you get a lightning bolt like Kyle come on and you're going to hear a unique perspective. You get Rebecca, who cares enough to tune in from work to offer her perspective. And that's a whole nother niche that I cannot overemphasize how important getting to female investors is. Okay. We have to collectively be reaching as many people as we possibly can. And I think that's very, very important. So Quest to Fire, thank you very much for your time, for coming on. And then finally, Dave with Hidden Freedom Investing. All right. 3 different perspectives on this gig. And I don't know if you guys get tired of me drumming over my perspective on this, but what I said about your perspective evolving so much over time, it is critical that you don't ever look at any of the perspectives that come through on the Independent Investor channel, or quite frankly, any of these other communities, and look to mimic what it is that style is. It's not going to make sense for you. Because here's the thing, in a couple minutes, I'm going to kick off of this live stream, okay? You will either say that was absolutely the biggest waste of time in my life, or you may take it in the manner that I expect it to be taken, and that it is life-changing. It's life-changing. I'm so amped up after these live streams, I have a hard time sleeping, because the power to get through to people is so important. But when that live stream is over and you're stuck having to go about your life, and maybe you suffer from a little bit of a lack of hope, right? And you tune into this and you're like, whoa, this guy's talking about belief and hope. I don't know if I can do this. I'll be the first to tell you that you can, okay? This is an absolutely new way of thinking about investing. It's a whole different philosophy to how you approach the stock market, okay? We all seek out our exposure in a lot of different ways, okay? But the common theme between all of us, channel creators, subscribers, anybody who come on and subscribe to this message, they're all trying to empower their own wealth building strategy. That's what they're trying to do, okay? And I think it's easy to get sidetracked in trying to copy a $500,000 portfolio when you may not recognize how much actual awareness, okay? I'm not going to say that this is like breaking rock, okay? This is not rocket science. It is just investing. And the desire to do investing is really the magic potion that you need to succeed in investing, okay? It's not about picking the stock at the right time. It's not about your ability to pick out when it is the perfect time to sell. None of that exists, really. You'll sell a stock and it'll continue to go up. It will happen, okay? Mark my word. But I think the mental mindset that you go into your program will be it'll be the very thing that defines whether or not you're able to succeed or struggle with the investing opportunity, guys. So again, I want to thank all the channel creators. Absolutely. We will be back on next Friday for the live stream. It will be another collaborative effort. So don't hesitate. I'm going to run it this way every single Friday. We typically run for about 2 hours. So the opportunity for channel creators to come and throw different ideas out there. But if you are a subscriber to the channel, I absolutely encourage you to take advantage of this opportunity. Okay. All right. You're not going to get the meaning of life from tuning into a YouTube video. Okay. You're not going to get it tuning into the Independent Investor channel. You're not going to get it by tuning into a viral video that's been released and it's reaching millions of people for 5 or 10 minutes. That's just going to automatically make you trip and fall into wealth. It doesn't work that way. It is a practiced art. It is. And the more aware you are and the more willing you are to practice that art, the quicker you'll evolve and the more you'll be able to validate your successes in the stock market, okay? The ironic part about it is when you first start investing, those validations are not going to be there for you. It is going to be on blind faith. And it's going to be also your opportunity to seek out support from this great community. All right. It's something that's been lacking in the investing world for a long, long time. And I think a lot of people are coming to terms with the fact that your mental mindset means so much more than the holdings in your portfolio to render success in the stock market. All right, guys. So with that, I will kick off the live stream. Thank you so much again to the channel creators, the subscribers. Enjoy the rest of your weekend, guys, and we will see you next week for the next Friday's collaboration. Keep it in mind if you want to join me on the channel. It's an open invitation to anybody who comes in here and consumes the content on the Independent Investor channel. Guys, take it easy, and we'll see you next week. Later.